Hello, everyone. Welcome to Now Next Later. It's Monday, August 5th, and we are joined by a guest today, Sasha. So excited to have Kristin Messerli here. Our first, I would say our first official guest.
Yeah,
So fun. I'm
couldn't have
excited.
chosen a better one.
There we go. That's what I like to hear. So Kristin, we have some of our audience coming in from the waiting room while we kick it off here. I just thought it might be helpful. We're going to talk a lot about your experience and particularly today's topic, your experience with consumer expectations and consumer adoption. When we met, you and I talked a lot about consumers. Who should mortgage companies be thinking about today? Who should mortgage companies be working on, thinking about tomorrow? This theme of now, next, later kind of traces a lot of our conversations back to then, because you gotta be able to serve the customer of today while building your business for the customer tomorrow. So the last few episodes, we talked a lot about the internal workings of the mortgage lending industry, what you think about building for MLOs, what you think about building for operations, and all of that in the context of like, what does it mean for consumers? So today we're going to flip the script and try to talk a lot about consumers. So before we do, happy to have you. Can you just tell us a little bit about where you work now and what you're working on? And then we'll jump right in.
Perfect. Well, so excited to be here. And this is, of course, the topic that I've spent most of my career really focused on. I am at this point, I've surveyed over 7,000 millennial and Gen Z consumers, and interviewed and done a lot of research on this for the last decade or so. And now have recently started about a year ago a nonprofit called First Home IQ, where our whole focus is on bringing financial literacy to the next generation. So very much focused on thinking about how do loan officers and real estate agents bring education to the next generation? How do you reach them, nurture these leads for to become home buyers? And then also, how are we doing that as an organization?
Kristin, say that number
Excellent.
one more time. How many Gen Z and millennials have you interviewed?
So I don't know the whole number, but over the last few years, we started doing, I started doing these next gen homebuyer reports that were sponsored by National MI. And at this point, we've surveyed over 7,000 millennial and Gen Z consumers.
Wow, that's awesome. 7,000.
Yeah, it's been super interesting. And just to see like how, because we started those surveys in 2020, like right as the pandemic, actually it was like right before, and then did a follow-up right after. And to see some of the changes in consumer expectations and all of that through the pandemic has been really interesting.
Yeah, what were those surveys focused on? Were they really looking at like seeing how financially literate somebody was, or was it looking at consumer expectations or otherwise?
Very broad, especially initially. And I do an annual report that's just like the next gen homebuyer report, kind of state of the next gen homebuyer. And we're looking at some of the common themes that have come up, though, are well, we focus a lot on the emotional aspect, like what kind of financial barriers do you have, but also what kind of feelings are you having coming to the home buying table. And distrust is a really common theme that has come up. So we dug in a little bit on that. And then, of course, financial literacy. So we did like a sub report that was just focused on financial literacy. And yeah, like looking at consumer expectations overall.
I love that. I recently did like a journal that I bought that goes into like your stories behind wealth. So like, what did you see growing up? What did you learn from your parents, right? How did, like, what stories do you tell yourself now, or what did you tell yourself then? How does that impact your financial decisions today? And it was a very interesting practice. I come from a divorced family, and I literally could not have two more opposite parents, where my dad was like made a ton of money in white collar, but also spent it as fast as he made it. And so like never had anything left. And then my mom was more traditional blue collar side of the family and like saved every last penny and, you know, ended up in a far better position. So just very interesting to have that dichotomy. You know, most children have one or the other, or, you know, maybe a combination of random things, but to like literally have the two opposite polar opposites was a very odd scenario for sure.
So that is actually like my favorite topic to speak on and talk about, because it's like if you look at some of the research, a lot of your money behaviors are ingrained by an early age. Like PBS study has one that says it's ingrained by the age of 7. So if you think about, you're actually absorbing your parents or caregivers' thoughts and experiences around money, whether you know it or not. And so yeah, if you go through a practice of like, what's your earliest memories around money? What's your what are the earliest conversations you remember your parents talking about money? You know, these different, or like, what are some big job loss or experiences like divorce that probably had an impact on your relationship with money? And I just released a report on money personality. So you'll have to go take that. You can find it at firsthomeIQ.com/money personality. And we dig in a little bit in those areas, like your security, confidence, and then financial behaviors and risk tolerance, things like that. So it's really, really fun. And afterwards, and this is about like reducing stigma on where you fall in any spectrum. It's just bringing awareness to, like you said, like, here's where I'm coming from. And now I have some awareness around it. So it's really
I'm
fun.
scared to take that test because I know I'm a therapy shopper, so I don't even want to know, but it's fine.
No, but this is the point. You don't get a score. Nothing is good or bad. It's just like, oh, like I tend to be more of a spender. And so then whenever you get recommendations at the end, it's like, here, you know, here's some recommendations to give you some safeguards around that, not like, oh, that's bad that you're a spender, you know? So,
You can see which side of the fence I fell on. Spender. Darn it.
yeah.
I learned the bad habits, not the good ones. I know we were supposed to talk about consumer adoption, but like I just couldn't help it.
Well, I think this is a good lead-in, actually. Yeah.
This is a perfect segue. Yeah, Kristin, you're exactly right. Sasha, I mean, one of the biggest trends right now that you hear about in the mortgage industry that I guess it has some consumer adoption piece, but is directly related to what we're talking about, what we're about to talk about, is first-gen home buyers. And I think it probably, I'm just guessing, I have one foot in the housing policy world and one foot in the lending world. And so I watched that happen where first gen became the new first-time home buyer that special purpose credit programs were aimed at, or other types of federal or state funding were aimed at. But where that actually came from was Freddie Mac discovering what you just said, that the best way to determine how a first-time home buyer is going to understand or adopt the mortgage process is whether their parents were homeowners or not. And so that meant the most vulnerable consumer were ones that had no parental knowledge of homeownership. So the kids of renters, the kids of lifetime renters, end up being the least prepared for any kind of process around homeownership or mortgage. So that was actually the research that led to why, you know, first gen, rather than just first time home buyers in general, first gen became a much more defined class that you could focus on, help, give extra resources to. It was based in that data. That's
huge. I want to make sure we're spotlighting that in our First Home IQ, you know, content, because it makes so much sense. Of course, it makes you feel like it's a natural step to buy a home. You're not as scared about it too. And I'm sure there's a lot of like, you know, financial institution fear and stuff too, in that demographic. But yeah, it's a different approach, I think.
So that's the crossover, I think.
Day, Jeremy.
Well, thanks. I'm glad that this is why you listen, for those that joined and for those that are going to follow us on YouTube after this. This is Now, Next, Later. This is the now part of Now, Next, Later. And hopefully we can kind of talk through our big question of the day in the now bucket, that is, how can you build and rely on consumer adoption for any kind of differentiator, any kind of cost savings or value add when you don't know, or you feel like you don't know. And one of the themes that Sasha brought up last week around AI that really inspired me to make this the topic for us to talk about today is this question of who's actually required to do the adoption to get the thing to work. We have mortgage lenders on the line, they're watching this. And sometimes I think it gets very blurry about when you build something or you plan to build something. Is it really the consumer that has to adopt it, or is it the referral source? Is it the MLO? And Kristin, you've been on a lot of different sides. You know, one of the interesting product design moments I had once was somebody described product design as sitting in a circle with a beach ball in the middle. And somebody on the other side of the room goes, yeah, that ball's blue. and somebody next to them goes, the ball's white. Somebody on the other side's ball's red, because it depends on which side of the beach ball you're looking at is what that product looks like to you. And so I think of you, Kristin, as somebody who has seen in this question of consumer expectation, consumer adoption, you've seen a lot of different sides of the beach ball. What are you seeing in terms of when you talk to 7,000 millennials and Gen Z home buyers or renters, when you do the work at First Home IQ, what are you hearing is like the biggest barrier to adoption, or is it adoption, I should say? We just said knowledge might be it. That seems reasonable to me. But you end up in this world of tech knowledge overlap. How would anyone think about attacking that when it's so complex and so hard to know, and I have to invest my money today for next, which we'll get to in a second? But how do you end up tackling that over the years?
Yeah, this is a really tough one. And I think most of my work has consisted of looking at different sides of this. And I think for most people watching this call, it's really crucial to understand of course, the adoption piece, but how you're sharing the technology itself. Because I think consumers have a very, very low tolerance for, or like they have a high expectation for customer experience when they're going straight to the technology. But they will build some tolerance there if they have a referral source in the middle that they are also interacting with. And so I'm sure everyone is very aware of that. But I will say, even for myself, going through that process a couple years ago, and I was using, I won't say the technology. I used some different technologies as I was going through, and I was just like, it builds up, fury inside of me whenever something is slow or it's, it's not super clear on the direction. And so it is really important for consumers to have just the basics. Like, this is fast. This is easy to understand. I know my clear next steps. I am really passionate about design, but it doesn't have to be the most, I think consumers will, put up with a lot whenever on the design front, but not the user design, so user experience. But yeah, so anyway, I think that knowledge is a piece of it, but it's really about, the access, so access to the experience, access to the person that they're working with, that I think is really crucial, and that there needs to be a level of trust in the person that's referred them for them to adopt the technology. But what are your thoughts? I think both of you have good perspectives on this.
I mean,
Sasha,
it makes sense, right? I mean, you think about that generation or those generations that are younger, like they are raised with instant gratification. Right? Like, you can get on Google and search for anything. You can go through a fast food, line and get food quickly. You can order something on Amazon. It shows up tomorrow on your doorstep. So they're used to a consumer experience across the board in their life, from childhood all the way through to, early adulthood, as whatever I want, I get it. I get it fat. To your point, it's easy. It's easy to understand. It's fast. And the experience is good enough that, like, I'm not going to be impatient and annoyed. So it makes sense. It's a little scary, but it makes sense. My experience, I think, is the same. Ironically, and I don't know if you heard this, Jeremy, when, you had your time in closing technology, we used to always hear borrowers say, like, oh, well, the older generation, boomers or otherwise, sorry for calling you guys old, but like, that's what they would say they're not going to adopt it. They don't want to go online and sign a document, online. They want to do it in person. And yet we saw like 80-year-olds, 90-year-olds, 100-year-olds doing it without any issue whatsoever. So although I think there is a higher expectation for it with these younger generations, I think in general, our world has just gotten more comfortable with technology being part of the equation. And it's interesting to see the dynamic around which ones demand it versus generations that might be a little bit more easygoing around, I could live with it or without it. And I'd be curious, Jeremy, I want you to answer first, but then I'd be curious, Kristin, from your perspective on the research you've done, where you see demographics show that somebody might just not have access to technology. And that's really where, there's a different dynamic that comes into play, even with this younger generation. But Jeremy, any thoughts? first.
That was our experience at both Rocket Mortgage and at Stavvy, which was depending on how comfortable you are with either the technology or the transaction. And what I mean by that is we saw a barbell effect where first-time home buyers were much more comfortable with technology, generally speaking, and were navigating their way and comfortable navigating their way. And the second most popular group that was comfortable understood the mortgage transaction because they were on their third or fourth one in their life. And so they, maybe even more than that, but at least a couple. And so when you had the older folks on there, they were like, oh, I know that term. I know what that means. I've done this before. And so we saw this barbell effect where actually the adoption struggle was what you referred to initially, Sasha, was like in the middle. Loan officers, real estate agents, and folks who didn't have the same technology familiarity or comfort, and also were trying to do it for people that were still trying to decide what they wanted to do in or out of their first home. So, you know, upsize, downsize, etc. So that was, I think that plays a huge part in it, from how you're going to think about your people, how you're going to think about what roadmap that you want to take. But I do think it is, you know, we talk about it's hard to measure expectation, and it's hard to like research and say my firm, my organization is going to set this expectation, then we're going to deliver technology and we're going to know that it's going to work. This is a mushy area. If you're the CEO of an independent mortgage company, it's like, how am I supposed to count on that? Like, what do we know and what are we guessing at here? And this is an area that starts to lean more into guessing, and that makes it very difficult. And as a result, we haven't seen a lot of attempts. Kristin, I don't know if you found a way to push people past that from an industry perspective because you have the data that shows that's what consumers want, or maybe you had some thoughts on like comfort that Sasha was asking about.
Yeah, well, first of all, on the comfort side, I mean, Jeremy, we were just talking about this the other day that consumers, of course, feel very comfortable connecting their bank accounts and all of that kind of stuff. Like we're way past that, you know, and even when I worked with the unhoused population, I was talking with someone at the event recently about this too, that people have iPhones before they have a home. People, you know, that the technology is being adopted in really underserved communities. So that's not an issue there, but it's how quickly or how, if you go as far as downloading an app or something like that, it's because you're going to get something that you really want or need out of that. And so having, you know, something where it's like, I get sent over a loan presentation or whatever, I should have a link to that. I shouldn't be downloading an app to see that. If I need to download an app to get to something bigger, that's fine, but it needs to be very clear what the reward of that is going to be, because to your point, Sasha, it's just all about the speed. And but from the industry perspective, I do think there's this like, I think we need to, if you're rolling something out in your office and with your team, that it needs to be really clear the reward piece of that, and I've seen it most effective to get some champions in first and people that, you know, are respected in the team so that they can say, here's what I did, here's how I rolled it out, and then other people will follow. And you know, here's the results I'm getting. But yeah, I do feel like a lot of the barrier to the consumer having access to good technology is coming from the loan officer not feeling comfortable with rolling that out. So if and when you choose whatever you're choosing to roll out next, it really needs to be very clear. Like that adoption strategy needs to be really clearly outlined.
Yeah, and talk about tolerance. Sorry, Jeremy. I should say, like, I've run into MLOs, they have low tolerance themselves, right? So like a consumer has low tolerance for if I have to go download something, I'm not extremely excited, or the process is slow, you know, things aren't moving quickly, the Internet Explorer dies out, whatever it might be, drives them nuts. Loan officers have very minimal, I think, tolerance for technology. Like if it doesn't work on the first try, you're done usually, right? And now you're working an uphill battle to get them back on track. Even if it does work on the first try, when you run into edge cases that are more complex, and they're just like, ugh, I don't have time for this, right? Like I want to go back to the way that I just did it before because it was easier and I know it, and I just don't want to deal with this. And so it's a
Yeah.
really interesting, again, scenario of like, it's not just getting consumers comfortable with, you know, to your point, a referral source that can say, hey, this is how, like, this is what to expect. So when this email comes over, or if you do need to download an app, like this is what it's going to look like. This is how it's going to feel. This is how long it's going to take. Same thing with the loan officer of like setting those expectations and like getting them to have that trust to be willing to work through the kinks, because no technology works perfect every time. No technology.
That's
Yeah.
right.
And
I
I
think
was
that
thinking-
digital,
No, go ahead.
well, I think that digital equity is where we're going. I think we're going to hear a lot in the next few years from an infrastructure perspective about getting Wi-Fi, like 5G, maybe even satellite Wi-Fi to everyone in America for exactly the reasons you're talking about. Because you do have a phone in a lot of communities, even if you don't have consistent Wi-Fi or a home computer, laptop, what have you, you do have a phone. And so the second piece of that I'm seeing that I'm really excited about is digital cards or debit cards that hold more information than just a balance. So I do like throwing out names on this podcast because I think it helps people ground like who's working on what. And I don't think anyone's going to get upset. But Mochify is actually a Black-owned digital bank where they are working on a card that has all of your social services. So you can get on the bus, you can get your food stamps, or if you're eligible for those, you can get into the library, you can do everything you need to do in your city. And it starts to capture that activity to get you eligible for a bank account. Then it delivers you that bank account. Then it helps record the payment of utilities and the payment of other things to then give you your traditional credit score to then get you out of renting eventually. So imagine that we're talking about access to your phone that's embedded where your need lives, moving around your city, paying for things. You can load up the card at any of those checkout kiosks. So CVS, Walgreens, Target, you can load your card there as well. So they'll take your cash and put it on your digital card if you're paid in cash or that type of thing. And so when I think of that, you know, embedded finance was a huge trend dating back to the last decade. I think it's now embedded everything, like embedded equity, embedded digital, embedded. The more and more that happens is kind of a lead into Alan's question, Chris, in the chat, which is like, if all of this comes true, we can deliver these digital tools the way that people want them. Can we actually show them that their cost went down? And I don't see how the answer is no, but you know, I'll put it out to both of you as the last part of now, as we bridge to next. What's stopping a lender from competing on digital with a discount in the market right now?
Yeah, I do want to bring up, I mean, I think one thing worth noting is that I think it's around 80% of millennial first-time homebuyers are white. And there is, and if you look at the first gen, you know, person and from communities of color, there's so much distrust in financial institutions that you're never going to get to the point of being able to offer that, because they aren't going to go down that path with the level of distrust that's, you know, started our conversation today of like being passed down from parents and previous generations. And so I do think that if we really want to reach that next generation, who is majority minority, I think at this point, or nearly that, we're going to need to be able to incorporate both of these things. Like, yes, one is let's streamline as much as possible. And also we're going to need to build trust with Mochify is a perfect example where they know how to build trust in those communities. But I think, you know, we'll need to deliver in a different way to be able to get them to that point.
The other part of his question was like, do you think if we got, his question was more, if we could show them the cost savings, would they go to a complete online experience, no interaction with human, right? But you're saying there's a level of distrust that needs to be bridged before that could even be possible. So let's assume that we get them to trust. Do you see a world where we go to a complete online experience for purchasing a home?
Yeah, I mean, I can't imagine it's like anything else. I think that the reason it's hard for me to say yes is just because there is so much fear and anxiety with first-time home buyers, no matter where they're coming from when they get into this process. I think most people want to have a conversation with somebody, even if it's just one conversation that's like hey, let me relieve some of this anxiety, explain what you're looking at, because to Jeremy's point earlier, there's terms that are, when they see these terms, they're like, this is over my head. Even as much as I can research online, I'm not going to feel comfortable making the biggest financial decision of my life. So that's where my hesitancy comes in. But I do think that we can get there. And I think that we have to assume that we're getting there, with the caveat that there's so much distrust and anxiety there that we need to be filling in those gaps.
So that confirms to a degree that the next step is we're not there yet on the next step, right? We've talked a ton about digital mortgage adoption in this industry. The three of us have worked in our careers in it in a variety of ways, but we're not even there yet. And it has a large part to do, it sounds like, complexity and fragmentation, and those have always been obstacles to adoption. And yet, one of the things we see that likes to come over the top of those from time to time are these really big viral trends. I say viral, that may not be the right word because everybody wants to go to like social media or something. But when I think of things, when people point to the Uberization of VC or the Uberization of startups, in part it was because how easy and quick it was to adopt the thing, right? So if I think about that from a mortgage perspective, we have really two adoption problems right now. One, do I even care to go through the mess to own a home? Is it still worth it? I think gets mixed up a little bit with what do I need to get it done? And we end up blurring those lines. So let's try in this next section to like disconnect the blurriness between it's worth it and I still want to own a home from, and here's what I expect to see out of my mortgage company or my real estate company. Because one of the things that I think embedded trends do, and one of the things I think is a risk to mortgage, is that embedded trends move the tools higher up to more higher profile or more powerful moments in the consumer's life. When you talk to product managers in Silicon Valley, they're not dealing in a heavily regulated industry like mortgage all the time, but they always talk about moments, and they talk about where the consumer's attention is when, and we don't do a good job with that, I don't think, as an industry. We've got some outliers we can talk about, but to me, if I'm buying my first home search is my moment. Now, whether that's with a person, a real estate agent, or a digital. So as we try to think about being a mortgage company, having technology that has to pass through people, having digital experience, can we kind of talk a little bit about the changing expectations, if any, around real estate and mortgage as being two steps in the process, or as being the same thing? Ultimately, if you're thinking about it from a product perspective, there wasn't a great question mark at the end of that, other than to say, Kristin, how would you deal with that if you had to make decisions about product allocation and about the future of the industry for the next 12 to 24 months of your business?
Yeah, I mean, I do think it's really important for us to remember that for the consumer, the mortgage is just a step in getting to their home, and it shouldn't be differentiated from a consumer experience perspective. But I think that, you know, one of the challenges is that, yeah, people are going to home search and they're looking at, they're trying to figure out how much home they can afford. And I think, you know, a lot of these tools do have good affordability calculators built in, but then going from that to how do I buy my home is a big leap. And one of our surveys found that it was 40% of women, 30% of men said that the first step, or knowing where to begin, was a current barrier to buying a home. And so just that's like a big moment and a big leap that doesn't need to exist. Like, we could bridge that, I think, if you're actually capturing people at that moment when they're shopping, or they're just, you know, it's different from, it's dream shopping, and then there's shopping, you know, and I think those are two different moments too. But yeah, I think it's important that we bridge that. I also think the way, you know, again, back to the communication piece, like, and we need to use simpler terms, and I've been talking about that forever, but like, you know, not using debt to income ratio, not using Yeah, and Mosaic Gatling talked about this recently, just how she went away from using words like being pre-qualified to getting an assessment, just things that lower that charge around the barrier to entry.
I loved her talk at Housing Wire. It was so good. She nailed it.
So great, yeah.
Yeah, I took notes on it and I put a LinkedIn post out. I'll have to repost it and share it because her change of the framing of the word and the nomenclature was just so powerful in how, to your point, the energy charge behind it and like how it sits with a consumer. Did any of your data point to, because like I think about when you say one of the biggest barriers, 40% of women, 30% of men just don't even know where to start. That's a marketing opportunity right there, right? And I get super excited, the little sales marketing side of me, like, well, hamster on a wheel. It's like, okay, find a solution, find a solution. So then does the data show where it's most impactful for them if that is readily available? Like, they're already searching for a home and something pops up. They're driving down a street and they see a billboard. They're talking to a friend and they hear them talk about their homeowner, purchase experience. Like, did any of the data point to like what resonates the most with, so that lenders could capitalize on like how best to get in front of these borrowers and start to build that trust and be the first thing that they think of when they go, oh, I know where to start?
Yeah, not in our survey data, but that's a really great idea for future research. And I think just from what I've seen and experienced, I do think that a lot of people build the trust through conversations with others. So, and I think that's what we're seeing with marketing in other products as well, not mortgage related. It's like they see someone like themselves, they see Instagram influencers and micro influencers talking about something, their own personal experience. And that's when they are able to build trust enough to say, oh yeah, I'll take a look at that, So I do think that's a good path.
And that kind of brings up why we may be seeing AI deployed so strongly in those like early consumer interactions. Because I think one of the things that's tough about changing industry terms or making even these small upgrades that the three of us are asking for, I think it's like almost so straightforward as to be overlooked. Like either, oh, we'll get there. We're obviously going to do that when we build the thing, and then we never do. Or that's not what's going to change my business. And I think what I'm asking, Sasha, is do you think it's a mistake to say, oh, that's not big enough to change my business? How small does the hinge have to be to swing the door?
Full transparency, I was looking for my post on Mosey so I could find that lovely graphic of how she framed things. So
yeah.
How big does the hinge have to be on what specifically? Sorry, because I missed it.
It's okay. So overlooking this idea that I just change these terms, I market this differently, I make it more comfortable or native, I think gets overlooked. People think, oh, we'll get there, and then they never do. Or they don't do it because they don't think it's meaningful enough. And what I'm hearing from you and Kristin is it is meaningful enough. Don't overlook it. But I'm asking, is that big enough? Is that a big enough? And I call it a hinge because little hinges swing big doors. That's the goofy thing that I use. But that would be the question here.
Yeah, and I would want data to answer that I'd be guessing at it, right? Versus knowing, I know you use that framing a lot and I like it. Like, don't guess at something, like go find the data. I'm sure someone's done it, whether Stratmore or otherwise, to show like what marketing efforts are your best chance at shifting that. But I do think at minimum, it is worth the time and effort for a lender to think about and be intentional around how your LOs are interacting in their communities with people and building relationships across the board with your referral sources, with potential buyers. Like any conversation you ever have where home ownership comes up, that's an opportunity for you to market yourself and your business and your brand and build that trust. And I think to Kristin's point and Mosey's presentation at Housing Wire, if you have someone who is like, hey, I look different than the average consumer that you normally market to, but I heard a story about somebody that looks like me and what they experienced sounded really great, then I can then relate that back to, well, you look like me, therefore you must be like me. And if you had a good experience with this company, then I will too. Right? It's that simple of a psyche. And so if that's the case, and that's what we're seeing, is that those conversations and those relationships are where that meet happens, and that the requirement is for you to have enough breadth of how you approach different audiences to meet them where they're at, then I say it's worth it. The how and the what, I need more data to like help advise people on, but I think it's worth it. And I think Kristin's points, Mosey's points, like are spot on with like, this is an opportunity that we've overlooked for a while. And like it or love it, a down market is a great chance to leverage the valley, so to speak, that we're in, and find ways to be more intentional about that marketing and communication and how we frame things.
Yeah. And I also think it was a while ago when we moved away from the lender being the center of the experience and now the consumer being the center of the experience. But we're still in that mindset that if I'm a loan officer, I can share to you the world and you're going to listen to me. And that's just not the case. I mean, consumers don't have that trust naturally, not just in this industry, but in all industries. We've lost a lot of consumer trust, has been falling significantly and rapidly over the last few years. And that's media, healthcare, you know, all across the different kinds of industries. So it's really important that we think about how do we connect with consumers and then get them to the expert. That's fine. But it's that initial step that I think does have to come from other consumers. And that's where that, you know, why I think influencer marketing really works. But being able to not just say, hey, look at me, hey, listen to me, but hey, I'm coming alongside you. Here's some information to empower you. Here's some other people talking about this to empower you.
Yeah, I think that's a really key point. We have Now Next Later attracts an interesting mix from like CEOs, marketing folks, product and innovation. Obviously, we all have a strategy piece to our work. And so I think what I'm really going to try to end on, we've got about 5 minutes left for later. And I think people come here to say, if I'm going to do all this, is it going to be meaningful and valuable to wherever this goes? And so I'm curious if we can take that last point about I need to review my business in the context of how the consumer interaction, the very first one and the subsequent milestones that I hit, needs to be framed in an evolving way, given everything we just said. And so when I think about that, I think it poses a real challenge. Here's the challenge, and we'll go from there. You know, consumers have been trained by technology and other big brands that you should get whatever you want, when you want it, in the way you want it. That is a real consumer expectation. I think it's healthy. It's fine. That is what consumer finance is, or consumer product especially. And so with mortgage, that's tough, especially in this way where you're shifting the business sort of out of the hands of the expert into the hands of technology, but maintaining the expertise for all the reasons you just went through. So does this evolve to a fully digital relationship with that expertise? You will always be interacting electronically. And if so, what does that mean, if anything, for resources and planning? Do you go more into education? Do you move things up funnel? What do you do with your referral network over time? I'm curious if we could think through where would you start if you believe that you do have a problem? So there's some people believe they don't have a problem. Let's say you heard this and you said, I need to start shifting towards a consumer that is less trusting, more digital, and is going to want different things at different times. The flexibility to just push the button and get the answer or access the expert on their own schedule. How do you prepare for the future in that world?
Sasha,
Kristin, we'll start with you.
Okay.
Oh yeah, no, I'm putting you on the spot.
I'm like, well, I've got questions
Yeah.
that like go into that, which is, where does the distrust start? Like, what does the data show that the distrust is caused by? Because if you get to the root cause of where the distrust is, then you can start to think about where you rebuild the trust. So what did the data show around like what caused it? I mean, I'm assuming some of it, to your point, around the stories that we learn and hear from watching our parents, right? That's a piece of it, but there's got to be more.
Yeah, initially I thought it was from the financial crisis, but we've seen now distrust falling in all other industries. So I think that a lot of it is related to the evolution of the internet, access to information and things like that. But and so I feel like that is such a complex question that what we need to do is realize that that model isn't there anymore. That doesn't exist now for a consumer just to be like, hey, I'm going to go down the street to my lender and trust them to guide me through this process. It's not that. So I think, in the future, looking at how do we, consumers don't know what questions to ask. Again, they don't know where to begin. So just saying, hey, the consumer can guide this process for themselves, that's not enough. They don't even know what questions to ask, and they're not getting the financial literacy education they needed to get to the point of understanding budget, credit, all the things that they would need to buy a home. So I think really getting to the point of how do we look at the customer experience more at a really basic level that allows the consumer to access information, but in a self-guided way, is, I don't know that answers the question, but I think that's where at a really basic level we need to go next. And I don't think we're at a point where maybe way further down the line, the lender and the realtor are going to be more interconnected than they are now, so that those moments aren't dispersed the way that that we were talking about. But right now they still need to have that connection point, but I don't think it's going to be from the very first moment.
Yeah, so it sounds like make it easier, right? Make it more simple. 100% think about if they don't know where to start and they don't know what questions to ask, then think about go backwards from that and think about what questions should they be asking, and then make that information more readily available. And to your point, in a way that someone could easily find it and self-guide them through the process versus relying on someone else. But then when the lender does come into play, or a real estate agent or otherwise, the relationship matters. And it's not just building trust and confidence in the knowledge that that person has, but also protecting their data, right? Clearly. And then also, what's the experience that I'm going to provide? And can you even relate to me? Do I sound like you? Do I look like you? And if I don't, can I show you that I understand what people who sound or look or whatever it might be like you feel, so that you feel that level of connection, and that then creates that trust that I'm going to be met where I'm at as an individual, not necessarily as just a broad consumer.
Yeah, and this isn't necessarily technology, but the more that you can partner with communities that already, or leaders that already have that trust, that's going to help you significantly in accessing those markets. Because it's just, I think, and that might be the influencer on social media, but it might be the a local, I have an ambassador who uses a local gym to disseminate education. And so it might be those kinds of leaders that already have the trust that you can then think about, how do I come alongside them?
Yeah, I mean, I think that's a really key point, which is at no point in this episode have we said this is going to be really easy. The solution's really easy. It's actually simple, which is we're dealing with humans, and humans have similarities that make them want the same things and behave similarly over time. But it's not going to be easy. It is going to be, I think of I try to avoid it as to best I can, the Amazon of mortgage, or the this or that experience. But one that you made me think of that I can't shake just in this hour has been the way that financing a car has changed. So and I'll just use my own example, even though it's totally cliche, which is Subaru. I don't actually care the bank that's backing Subaru. When I go to Subaru to deal with my buying my next Subaru or leasing a Subaru, they've already got me from a brand perspective. So when they go, oh, and by the way, it's Chase that'll be, taking your money each month. It's like, oh, okay, whatever. I don't care. And I think because I care about the Subaru, right? So I think that, to me, whether at a micro level with a community influencer, like you said, a gym, a religious organization, a community organization, or if you're thinking at scale, for those on the call thinking at scale, Subaru and Chase Bank, those are some pretty big brands, right? But who's the one that I'm loyal to? And I'm really fearful that I keep hearing from mortgage companies how we're misunderstanding how valuable Salesforce, the Salesforce is, the MLO is. And I'm really fearful that mortgage brands are not realizing what you just said, Kristin, which is you have to connect at this interconnectivity where the technology is going to make the difference is reaching all of those key points, reaching all the dealerships everywhere, reaching all the community leadership. That's actually where you get the person walking in and going, all right, this realtor is my key point, or this bank branch, or this whatever the key point you've determined for your business is your differentiator. You got to get your technology there, and you got to make it really straightforward for people to use. Otherwise, they're not going to know you. They're not going to find you. And I still think we're relying very heavily on an expired view of sales. And hopefully that's a challenge question, not a threat. It's just simply an opportunity for us to think about this question.
Yeah, I mean, I think looking at the last decade, how much has changed, we really can't, I think it's important, we can't see what's going to happen in a decade, but we know a lot is going to change, you know, and I think it's really important that we are always looking at, yes, where can we get business today, but where is our business coming from? And I love that analogy that you used. I think it's really, that's key to how we're going to build trust with consumers in the future.
And I don't hear your
Thank
comment as a
you.
threat. I hear it as a call to action of everyone's got to level up, right? If you expect the technology to be there, then you've got to be there too, as the lender, as the LO, as the real estate agent, as the influencer, whatever part you play in this ecosystem, you got to level up too.
It should be exciting. That's right. It should be, because it feels exciting to especially to uncover insights that end up being the thing you can look back on and be like, man, look at when we learned that, we went here. I think that's really cool. Well, hopefully, Kristin, you'll join us again and come back and keep this conversation going month over month. We'll keep finding a way to pick the next topic and put you on the hot seat.
All right.
I'll
Thanks
create
so much.
some survey questions for you too, because I'm now selfishly wanting it.
Okay. Yes. No, please do. Thanks you guys for having me.
Yeah.
Thanks, Kristin. Thanks, Sasha. See you again soon. Thanks everybody for watching Now Next Later. What's next in housing? See you then.